Dreaming of that perfect property investment? Whether it's a charming house in London or a luxurious beachfront villa in Dubai, exciting possibilities await. But before you conclude, understanding the tax implications becomes crucial. Today, we'll unravel the tax mysteries of two top property investment destinations, the United Kingdom and the United Arab Emirates. Get ready as we navigate complex property taxes and empower you to make informed decisions for your investment journey. Hi everyone, I'm Sujiwa, a qualified chartered accountant with years of experience in the UK and UAE property taxes. Together with the skilled team at Crevati, we're passionate about empowering property managers and investors like you to maximize your profits and minimize your stress. Today, we'll be comparing real estate taxes in two popular destinations for investors and residents, the United Kingdom and the United Arab Emirates. But wait, what about other exciting real estate markets in the Middle East? If you'd like to explore tax complexities in other GCC countries, head over to our YouTube channel. There, you'll find a valuable webinar I co-hosted with my partner Jude, discussing the topic of tax landscape changes in the GCC. This insightful session dives deeper into regional tax considerations, so be sure to check it out. So let me talk about first UK property tax at the acquisition. When buying property in the UK, you'll encounter stamp duty land tax. We called it SDLT. The rate is progressive, meaning it increases as the purchase price rises. Expect to pay between 2% and 15% depending on the property value. Further, if you are a first-time buyer for residential purpose, you can claim back SDLT. Now, if we go back to UAE, especially in the Emirates of Dubai, you need to pay 4% of the property value as legal fees to the land department. We called it as deed registration fees. Now, let's talk about other property tax in the UK. Owning property in the UK extends beyond the initial purchase cost. Here's a breakdown of some key ongoing taxes to keep in mind. 1. Council tax. This annual levy is based on your property's valuation and used to fund local services. The exact amount varies depending on your location and property band. Good news, if you're renting out the property, you can pass on council tax to your tenant, typically amounting to 8% to 12% of the monthly rent. 2. Rental income tax. The income generated from renting out your property is subject to income tax based on your tax bracket. This can range from 20% to 45% depending on your overall income. 3. Capital gains tax, CGT. Selling your property for a profit triggers CGT. This tax is also calculated based on your tax bracket, ranging from 18% to 28% on the gain you make. 4. Inheritance tax. This tax applies when you pass away and leave your property to a beneficiary. The standard rate is 40%, but there are exemptions and allowances available to minimize the impact. Now let's explore the tax landscape in the UAE, known for its simplicity and minimal complexities compared to the UK. 1. Service charges. Unlike the UK's council tax, the UAE operates with service charges. These charges cover maintenance and upkeep of common areas in buildings or communities. As the landlord, you are responsible for bearing these costs, and passing them on to tenants is not permitted. 2. Rental income tax. Here's some good news for investors. Rental income in the UAE is generally not subject to personal income tax for individuals. However, it's important to remember that businesses operating in the UAE are subject to a 9% corporate tax. This distinction is crucial, and I, as a UAE tax consultant, can advise you further on specific situations. 3 and 4. Capital gains tax and inheritance tax. Both capital gains tax and inheritance tax are currently absent in the UAE, making it an attractive option for investors seeking to minimize potential tax burdens associated with property ownership and inheritance. As you've seen, the tax implications of owning property in the UK and UAE differ significantly. By understanding these differences, you can make informed investment decisions and potentially maximize your returns. Remember, while this offers a general overview, seeking personalized advice from a qualified tax professional is always recommended based on your specific requirements. Stay tuned for more insightful videos where we delve deeper into the real estate markets of both the UK and the UAE, exploring topics like mortgage options, payment plans, returns, and potential challenges. If you found this video helpful, please consider subscribing to our channel. We're passionate about providing valuable content for your real estate journey. And as always, if you have any questions, leave them in the comments below. I'll be happy to answer them personally. Thank you for watching.